Alright, done one of these in a minute. Today is November 4th, 2024. Today is Monday. I was trading US 30, New York session. As you can see, we got the previous day's high and low. These dotted lines, previous day's high and low, which was Friday. This green line is closing price, Friday's closing price. I saw the market pumped up. Asia, London, New York. New York put in a high of the day, created this M structure, broke down, came inside the 20 EMA. My signal is normally pullbacks, and I normally look for pullbacks on the 15-minute and the 1 hour. As you can see here, we had a 15-minute pullback. I kind of came late to the market, so I wasn't there to even try to be a part of that. But later on in the session, this is around, oh wow, you wanna know what's crazy? I just discovered this. Cause on my MT4, it was correct, but due to daylight savings, we're gonna do this live because I forgot that to even change that. I gotta take this off. Daylight savings. So you see how those boxes just move? That's why I was saying that I wasn't at the screen to catch that 15-minute pullback. This thing is not showing up. This 15-minute pullback that was right here. This thing, come on, man. No, it's not letting me do it. Damn. Alright, so I want to do it. I want to show that. I hate that it's doing that, man. Nope, I ain't doing it either. Damn. Alright, well, the box changed. Like, as you can see, after that 15-minute pullback was actually 8 o'clock. I definitely wasn't at the screen at that time to be able to catch that. But that could have been an opportunity. But this other 15-minute candle, I'm gonna drop down to the 1 minute because my little tool that I normally use, where you can actually show the time, that's not showing up. That's what I've been trying to get. But at this time right here is this 15-minute candle right here. Here we go. The 9:45. It started at 9:45 and it printed at 10. So that's what I was trying to do. This 15-minute candle right here, this is at 7:45. I definitely wasn't awake to even catch that if that did play out, but it did print around closing price, which like Stacy say, try to get most entries at closing price. But this started at 9:45, printed at 10, which was my signal to start to look for sales because the market was already dropping. So the pullback is really just for continuation. So if we drop down to the 1 minute, which is where I normally look for my entries at after a 15-minute pullback. This horizontal line right here is the top of the 15-minute pullback candle. So this was a little, I don't want to say a little, this was very choppy for my liking, what I normally try to look for after I get a pullback. But this is the neckline. So I look at this, I'm looking for an M structure. I looked at this as the M and this being the neckline of the M. With this being choppy and consolidating, I didn't get a solid break. On my MT4, this candle right here actually broke below this neckline, and when it came back up, I actually sold it right here at 1023. But then it pulled back on me and stopped me out. So I'm like, damn, okay, I got stopped out. Let me wait, see what the market does next. The market dropped here. I believe I got back in at the neckline again when it pulled back, and I might be wrong. I might have gotten in at this one, because I do remember getting out when it pulled back, and I came back later and I saw that this drop right here happened. I'm like, oh shoot, it actually is, you know, it got some sell pressure in there. Not pressure, but it's just sellers are in because it dropped down a little bit. Then it pulled back. So if I didn't get out of that, if I didn't close, I closed it in profit, like a really, really small profit. But if I didn't close it in profit, it would have ended up stopping me out here when it pulled back. But I put this horizontal level here because this is like a lower high, the most recent lower, the highest lower high, most recent. I'm gonna say the most recent lower high in structure. I looked at that as like a resistance level, which this one is too, this one is too, but this was the most recent one. So I just drew a horizontal there, but you can see the market came up to it and then dropped back down. This is really, really choppy. This is, like I said, this is a lot more choppy than I like. When it came up and hit this, I could have entered here as a, you know, as an entry, but that's, like I said, it's too choppy. So what I notice is, to avoid the chop and being all, you know, mixed in with all that confusion, like I mentioned, the neckline of the M on a 1 minute, this is that same neckline here, right? So this is the top. This horizontal line is the top of the 15-minute pullback. We didn't get, none of these candles broke below that neckline on a 5 minute, which is the next time frame up that I like to use. 1 minute, 5 minute, 15, and then 1 hour. But now that I'm on a 5 minute, this is at 10:55. This is the first candle that broke the neckline. Once that candle broke the neckline, I could have either entered after the break or waited for it to pull back to the neckline for entry. And as you can see, once price broke it, because the break is strong, once it breaks, you have people that's monitoring these breaks that say like, I ain't doing nothing until it breaks. Which with me, I was on a 1 minute, and the 1 minute had a lot of noise, a lot of consolidation, back and forth, where it was really no solid breaks. I could have been basing it off of a 1 minute break, but a 1 minute break isn't as strong as a 5 minute break or a 15-minute break. So this 5 minute break broke, and then it came back and dropped immediately after. So I felt like if I was monitoring the 5 minute, which I wasn't, but if I would have been monitoring the 5 minute and considered the break of the neckline on a 5 minute, I feel like that would have given me a better entry. Another thing is, on a 1 minute, once it pulled back, I could have started to look for entries high as it started coming up, like closer to triple zeros or just higher instead of getting it so low. I'm gonna show on the 15 minute, because the 15 minute I noticed that same break like how the 5 was. That 5 minute break, let me go back to the 5. That 5 minute break was at 10:55, closing at 11 a.m. Now let's look at the 15. The 15 minute one, and this is all after the 15 minute pullback. That was my signal, so I was right on the direction, but I could have just gotten a better entry to survive the pullback, you know, it pulling back on me after me entering. So this is around the same time. It was a 5 minute break at 10:55, which closed at 11. And you also have a 15 minute break of that same level, which was here. 10:45 it started, and it closed at 11, which was around the same time as the 5 minute. Broke that same level and retested that same level that it did on the 5 minute and just dropped. So I feel like that was the move. That was the move in the sense of entry wise and having a better stop loss, waiting for the break on the 5 minute or the 15 minute or both. That would have given me a better entry, because most of the time I'm really just looking for that structure break, the neckline of the M breaking on the 1 minute, which a lot of times works out for me. But when the market started chopping and chopping and chopping, I should have started to consider the other time frames like the 5 and the 15 to help me survive, you know, taking a loss. Another one I noticed was gold. Gold wasn't. I don't feel like I would have taken this live because it was a little choppy as well. It's not the cleanest, but like I mentioned on NAS, you got the 15-minute pullback. That printed right here, dropping down to the 1 minute. And as you can see here, this is what I explained about the neckline of the M. This is the neckline of on the M. Example on gold, where I said I really just try to wait for the entry on the 1 minute and the neckline of the M being broken, which it didn't break it here. Well, in the 1 minute, you had the right leg of the M closing inside of the 20 EMA. This is a clean M. So I just look at that as like I could have entered right here. A lot of times I say I could either enter off of the break of the neckline or the right leg of the M, and then a second entry for the neckline of the M retesting, like if it broke down here and then pulled back to that level and then dropped down. But it didn't give me the pullback. It just dropped right after it, you know, right leg closing inside of the 20 MA. So, but this was a more simple one where it didn't play around. It just boom, 15-minute pullback, which was this horizontal line here, M at the pullback, at the top of the pullback, closing inside of the 20 MA and just tanking. That was a 50 pip. That was 51 pips to be exact. Which is why a lot of times I say, man, I'm going for 50, because I would try to go for 75 and it would never reach 75, and then I'll be like, damn, I should have went for 50 instead. I missed out on a lot of trades trying to go for more. But this dotted line is also previous day's low, so it makes sense that price reacted off of that, and not went, you know, lower. Because a lot of previous days low acts as support, previous days high act as resistance. So if this is support, people are going to try to buy at support, you know. But that was a good one there between NAS and gold. I felt like NAS was a better one in the sense of it offered more, but I feel like gold was cleaner for the 15-minute pullback signal with the 1 minute entry with the M structure. So those are the two trades I wanted to break down for today. Again, today is November 4th, 2024. Today is a Monday. Still got 4 more days of the trading week. We'll see what else any other opportunities we got for the rest of the week.